Hello, everybody. Thank you for joining me. My name is Stephen Choi, and this is Trading with Livevol. Basically, this is where I use my own Reg T account, and I trade using LVX. And then you guys can see how I trade and how I use the software. So let me actually go to my account. Looks like I'm just pretty flat today. Nothing much going on. I did do a VIX trade, so let me actually go to VIX. So originally I had the 1626 call spread, basically to hedge all my position. And today I put in 20 lot bid here for 10 cents. And what I was trying to do was close this part out. So if we do have another down move, I have the option to close the 16s out. So I'm just paying a dime to get ready to close this out whenever I want. And I think right now, looks like we at least stopped the trend. So I'll see if kind of like, if it's like a pause, like around here where it pauses and then goes down again, or it basically pauses and then goes back up like here. So I'm just going to wait it out a little bit and still keep that protection, but once I feel like I don't need it anymore, I'll just close it and go from there. As you guys know, I always look for opportunities using this watch list, and that's the one I use, this watch list trade. And if you look at it, there's 1,000 contracts or more, and I basically just scan this all day to see if there's something that's useful, right? So while I was scanning for this, I did notice something. And let me actually punch it up. It's in, so it was in SPLK, right? So I saw this trade go through, and let me actually go to it. And I see that people were doing this spread for 190, where they bought the May 65 calls and sold the April 65 calls, right? So I started looking at the chart. Looks like there's some pretty good support here at around 62, and the vol was pretty high. And I think what this guy is probably thinking is he wants to bet on SPLK recovering from this sell-off, but he wants to do it for a cheapest price, and he doesn't think it's gonna basically really recover in the next couple of weeks or maybe week and a half. He does think maybe it's going to recover in May sometime. So I can see him doing the spread. So I like the spread, so I basically piggybacked it. So as you can see, I actually did this spread as well, but I did it for 310 and 125 instead of 320 and 130. So I did it for nickel better, and the reason I liked it, and as you guys know, what I try to do is I generate a lot of ideas off of the scans and the order flow information. I check the volatility, and then I start investigating, and if I like it, a lot of times like they actually do the trade, and then they generate the idea, and then I try to piggyback it, but for a better price. So this is a perfect example of doing that. So you see how I bought the May 65 calls for 310 and sold these for 120. And basically what you're betting on is that SPLK will recover, but it won't trade above 65. Or relatively around here is where it'll be by April 19th expiration. So by April 19th expiration, this spread here should be bigger than the 190 that he paid for, right? So that this person paid 190 for the spread. If everything goes according to plan, and let's say Splunk goes to 65 by April expiration, most likely what will happen is this option will go to 0, and this option, let me see what it could be. Right, so maybe it'll stay around the same or a little bit higher. So it might be like $4.30 or something, right? Because the stock is now appreciated. So you know, maybe $4.50 might be the right price if it goes up to $65 by expiration in April. So that's, I like the trade, so I piggybacked it. Obviously, I only did it one time. Normally, I do a lot more, but as you guys know, I haven't been trading that well, so I just have to kind of go with what my account says and go from there. So right now, I'm pretty comfortable with this trade, so I decided to put it on. So there was this other trade that came up. Let me talk about it. It's James River Coal Company. So basically, this morning, they announced bankruptcy, and the reason I want to point this out is there was a ton of these options traded for you know, 65, and then these were trading for 30. One important note is usually when companies go into bankruptcy, the shares, you see this price 36, it's worth nothing, right? So people, I don't know why people trade it for higher than what it is now, but eventually once they settle everything, it's going to go to 0, right? It's not going to be worth anything. But I want to make note that sometimes there is opportunity to make money in doing these. So a lot of times, and sometimes I actually had these put options trade higher than the strike price, which if you sold it, makes it impossible for you to lose. Pretty much, and I've done that before. So what you can do sometimes is after reading more about it, you can see when everything might be settled, and there are opportunities for you to buy or sell some options, right? So a lot of times, like this guy paying 30 cents, most likely they'll make money if this stock goes to 0 by June. And they resolve all the paperwork, basically the stock will disappear and the stock will be worth nothing, and you know, you'll make 20 cents on this 30-cent investment. But maybe you know, if you feel like you know, it's not going to get there by then you want to sell it. But most likely there's nothing here that will make me trade anything right now. But there could be some opportunity, so it might be worth just looking at to see if there's something to do. Sometimes like they'll sell like out of the money calls. Sometimes they'll just have to close positions, so they'll come in and pay whatever the offer is. So one thing of note, sometimes it's closed only. So if you're opening up a position, sometimes they don't let you do it either. So, but it's something of interest. Bankruptcy. I traded a lot during 2008, but there hasn't been too many recently. Let me actually go to Apple. So Apple is right at almost like my break-even point for the spread right here that's expiring in April, right? So if you look at it, and I'm gonna pull it up right now, and let's say I bought this and sold this, which is what I did originally, and I paid $11.50 for this spread, right? But the Apple stock was trading $5.30. So Apple was trading $5.30, and I paid $11.50 for this spread. So now Apple is trading $9 lower, and basically I lost 40 cents on the spread. Right, so if I want to get out now, I can get out now, and I lose, like even on the bid, I'll lose 55 cents. It is why, even though right now it's not making money, I like that trade because it gave me a lot of room for error. So if Apple dropped $10, I lost, a fraction of my investment. And if Apple went to 530 or stayed there, I would have made 80-some%. So I still think this is a good trade. So I don't plan on getting out, but I wanted to illustrate to you guys how sometimes doing the right spread can really help you, right? So in my opinion, this was the right spread to put on. And I wish I put it on more so I could have like scalped in and out of it, but it is what it is. I did this one lot. I'm gonna stay with it for now. Hopefully Apple get a bounce and I can get a better price than what I paid for. But for now, that's how it stands. As you can see, I have May and I have a lot more spread. So by that time, I'm hoping Apple kind of goes back up to the 540 range, but we'll see what happens on that. Also, yesterday I did this spread, this put spread, basically because same as SPLK, I piggybacked this trade because I liked it, right? So I bought the Julys, sold the Mays. I paid 45 cents, and now I think originally the block trade they paid 55, and I paid 45 because I liked the trade, but I wanted to get it for cheaper. So here's another illustration of kind of piggybacking the trade. We'll see how it goes. The next trade is another piggybacking trade. So DFC Global. So basically they got bought out for 950. But as you can see, it's actually trading higher than 950 because I guess all the shareholders are gonna kind of complain, and they're investigating and kind of thinking of maybe taking some legal action against people. And so what people were doing was they were selling the Mays and buying the Julys for about a dime, I think. There were so many traded, it wasn't like one set spread. But I like this trade. As you guys know, I have talked about this trade before, where something is announced on takeover, but it's not basically completed, and all these back month volatility is really low. So if I look at the chart, you see how low this vol is. Basically, if anything happens where the deal might not go through, so let's say the shareholders are not going to vote it through, and then let's say the acquirer is unwilling to raise the price, basically what's going to happen is it's going to the volatility will go back, and even if the stock goes down, you might actually not lose, you might actually make if you own the further out option. So a lot of times if they have leaps, I like buying some leap options, but in this instance, they didn't have any. So I'm basically going to do this. Hopefully May rolls and nothing happens, or it goes up to 10 bucks, and then these will be worth a lot more than a dime and 15 that I paid for, and these will expire worthless. So in the past, like these things, making money gives you, it's only about like, I don't know, 20% chance, 10% chance that it comes through, but when it does, you tend to make quite a bit of money on these kind of deals. So that's about it. I was looking at some other stocks, but there wasn't that much. So I think there was the sell-off. Everyone's trying to see if it's going to continue. Looks like, at least for now, it's taking a little breather. But I don't think you can make any kind of determination that the selling is over just by today's action. I think we'll have to see in the next couple of days to see what happens with the general market. But other than that, take care, and I'll talk to you guys soon.